Peace and blessings, everyone. I'm Bree.
And I'm Lisa.
And you're listening to the Ask Bree and Lisa TV.
For another episode of Caffeine and Cash Flow.
There we go. I like that.
Yeah. Okay, so we're back. We're back for part 2 of our 4-part series of myth busting.
It's Life Insurance Awareness Month. And if you were tuning in last week, we made it known that for the next 4 weeks, this being week 2, we were going to be covering some, some myths, some facts. They're basically facts. There's some statistics and
some misconceptions.
Yeah, and the whole point of the Life Insurance Awareness Month series that we're hosting this month is to just touch on some of these statistics, some of these facts, and help shed some light and help bring more understanding for people in terms of why those stats are like that and why they could be changed, why should they be changed. So this week, we're going to be covering the statistic. It's very disturbing, really. There's around 54 million women that say that they need or need more of life insurance. 54 million women. Now, I didn't break that number down to get like a percentage because there's another statistic, around, 40 something percent.
42%.
42% of American adults say that they also need life insurance or more of it. So you got 42% of American adults as a whole, and then you have 54 million women. And I don't know the statistics being, class, being, ethnic background. I don't know what the percentage is of 54 million of those 42% American adults, but that's a staggering number considering that women are big time breadwinners in today's society.
So the misconception is saying that women don't need life insurance as much as men.
Because men are traditionally known as what?
The breadwinner. Right. Traditionally, right? That's a good old back in the day type of statistic, right? Or type of belief.
Back in the day was like yesterday.
Well, to believe that, it's men that are the breadwinners, the women stay home and take care of the kids. Like, how long ago was that? Because nowadays with society, it needs to be a 2-income household nowadays.
For one, and for two, we personally know 1 or 2 men that are stay-at-home husbands.
Right. And there's nothing wrong with that.
There's nothing wrong with that. But traditionally, that wasn't the standard. That wasn't the case. So
right. So why is it the misconception? Or we just said why it was a misconception, because that was the belief, how it used to be back in the day. Men were the breadwinners. The women stay home. They did all the cooking, the cleaning, they're taking care of the kids. The men went out, did that. And that was like, that starts like way back when, right? Where it was like the women stayed and did all of that. And then the men were like the hunters and the gatherers, and they went out to do the things. But anyways, okay. So that's why, the misconception is what it is. But we are here to tell you that is not true. That is not true. Women should absolutely have just as much of life insurance as men, if not more, right? Because nowadays, when we're seeing as far as statistics go, 40% of households with children rely on women as being the primary or sole breadwinner.
Right. And I wouldn't necessarily say that women need just as much or more life insurance. Men, women, husband, wife, everyone needs coverage. Now, everyone's coverage needs are different. That's why as professionals, when we sit down with clients, we do financial needs analysis, because everyone's needs or your financial goals are different. So it's not, I wouldn't necessarily, say that they need more, but they need it just as much as just as much as they say men need it, because traditionally men were the breadwinners. Now, given the fact that nowadays it's almost imperative for, comfort or sometimes survival to have a multiple income household. So that could be 2, 3, 4, 5 incomes. It could be 2 jobs and a side hustle. It doesn't matter. You need more than one stream of income in order to be comfortable or survive, given certain variables, the size of the family, the needs, the necessities, the expenses. But women are traditionally known, and practically still are in some cases, to be, the caregiver of the household, the children. Sometimes, they have children that are young, children that are special needs. It doesn't matter the case, they're the caregiver, and it's unpaid. They're not getting paid to take care of their kids and things like that. So an example would be like, what if, there's a mother in the household, right?
Mm-hmm.
She works full time. The husband works full time. They take care of their kids, or they homeschool. All these variables. And what if something happens to her? She gets sick, she get hurt, she passes away. Who's gonna start taking care of the child if nobody else was? So
Right. So like in other words, right? So you have the unpaid care, right? Care of whomever in the house, right? Including the other significant other, right? Because that's playing a vital part as well. Plus, they could be managing the finances. They could be the big, having everything in order, organized, right? Having that all. So they can play a big part in managing the finances, providing that unpaid care. And then also, like you said, working full time. So they're contributing to the household. So that's important. That's important. And then to not have any coverage for the women, and it's only coming on one side, or the man or the other person needs to have it because they're the breadwinner, but the other individual doesn't have any because they're not technically the breadwinner. That's not okay. There needs to be coverage across all platforms, because like Bree was saying, if something happened to the mother, it costs to have childcare, right?
Like, it costs a lot. I've heard people, not to interrupt you, sorry to interrupt you, but I've heard moms specifically, some complaining, some just stating the facts, that it can cost up to $300-$400, if not more, a week for childcare, some sort of childcare. Everybody's childcare is different, and that's a lot of money.
Yeah, that can be more than what some people are paying in rent, depending on where they're at, right? Or that could be just as equal to a mortgage or a car payment, a car note, or whatever, right? So it's like and then to go from having that unpaid care and always having that help to not having that at all. And then what if, like Bree was saying, the mom was working a full time, so they were contributing to the household. So there's no more contribution to the household, and now it's only coming from one sole provider. Plus, not having any extra care help, right? Because the person that has to go out and work full time, who's going to watch the kids if they're not already in school?
Right.
But then even then, if they get out of school and this individual works past the time that they get out of school, who's taking care of the kids when that happens? What after school program do they have to pay for so the kids can stay longer until that person gets out of work, right? So it's just it's just important. It's a whole other thing when you go from having all of this in place because you have that other person and you're relying on that, to now it's only just you and you have to manage it all. with no other help, right? So that's why it's a misconception. Absolutely a misconception to believe that women shouldn't have, or they should have a smaller amount, or
Littler.
littler, a smaller, a smaller amount, or not have it at all, like that's not okay. Everybody should absolutely be covered.
Not to mention, what if out of those 54 million women that need insurance or need more of it, let's talk about the need more of it.
Right.
So the ones that need more of it, they already have some, right?
Right.
What if the sum that they have, they're renting that insurance, they don't own it. So if they get hurt and can't work, or they pass away, the insurance that they're renting, i.e. group insurance from their employer, they don't own that. So if they pass away, the family gets nothing. You're paying out of your paycheck for rented insurance. You pass away, and say you're a breadwinner, your family gets none of that money that you've paid into, because your employer is not about to pay your family that, because you were renting it. So the people that need more of it, do they own the insurance that they already have, or are they renting it? See, this is why it's important to sit down with a financial professional and learn about why it's important to own your insurance. Like, we're in the age of more people wanting to be, we're in the age of people seeing more of the benefits and advantage of being entrepreneurs, owning, land, owning your car, owning your home, owning the job or the business that you own, like ownership. And you're renting your insurance. Like, people got insurance on their cell phones, on their cars, on their apartments, on their homes that they're in. People got insurance on all sorts of things, but not their life. And then they got the audacity to rent insurance from their employer and claim, oh, I already have insurance. I pay $5 out of my paycheck. That equals up to like $20 a month for X amount of coverage. And it's like, but what is it actually covering?
Because it's honestly only pretty much covering, one, the protection of the employer that you're working for, and two, it's if like you got hurt for a little bit, that the insurance would cover that. But if you were to like pass, there's not really any benefit that your family gets through your employer
At all,
right?
Because they're
they're renting it.
They're renting it. Yes.
Yeah, they're renting it, yeah. and it's just not. Yeah, and then to think about it, it's just like, you're. Because I'm processing like what you're saying, because it's crazy to think about that, like you're contributing so much into this life insurance, policy, but then you get there's no benefits that comes out of that, right? Like, we're here to open our clients' eyes and individuals' eyes that you can have life insurance, have living benefits, so you're not only insured and covered, but you have living benefits. So if something were to happen to you, chronic, any type of illness, anything, you can no longer bathe on your own. You can no longer dress on your own, eat on your own, chronic heart attack, stroke, whatever it is, those living benefits will take care of that.
And living benefits, if I'm not mistaken, I just found out, living benefits is fairly new, maybe about 10 years old. Like, I think anybody that owns life insurance, and started the policy, say before the year 2014, it's old, it's outdated, because of I don't think don't quote me on this. I'm gonna have to. But I want to believe
it's the newer age.
Yeah, it's just, if depending on how old, and this is another reason why we do reevaluations. We sit down with someone and they already have certain things in place. We reevaluate what they have in place, because who's to say that the agent that they sat down with at whatever time, X amount of years ago, who's to say that agent actually looked out for their best interest? Who's to say that they got set up with the best policy or the best plan or the best strategy that works for them in their life? And then their life changes. circumstances changes. So when you set up that policy 5, 10, 15, 20 years ago, your life is not necessarily the same now. So what are the financial needs and goals that you have now? What's your family like now? You got a bigger family, this, that, and other. How much do you want to protect your family? We're not here to convince somebody to love and care for their family. We both understand that life insurance is a huge sign that you love your family, but we're not here to convince somebody to love their family. That's on you. But at the end of the day, if that's something you value, it's all about speaking to a financial professional and finding out what is it that you can do for you and your family. What are your goals, right?
So let me give you an example, right? I'm going to tell you guys a couple of stories. So we have a client, right? And we did a financial needs analysis today, actually. And so we kind of just broke it down and got it all, mapped out. And we learned that she's married, right? And she has 2 kids, little babies, very cute. But we learned that she needs to have about $1.3 million in coverage.
Now, you want to tell the people how you came up with that number, or is that another episode?
Well, I mean,
it's fun. It's really fun coming up with that number. But no, continue your story. I think that'll be another episode.
Okay, so we came up with this. We came up with the total that she needed about $1.3 million in coverage. And she only had 400,000 in coverage. Currently, she has about 400,000, which is pretty impressive. That's more than what we encounter with most individuals. Usually they're somewhere around like maybe the 100, maybe 200 realm. But she had $400,000 in coverage. However, she needed 1.3. So this would be one of the scenarios where the woman is underinsured, right? And when she got these policies in place, it was before she had her 2 kids, right? And it was before there was the husband involved, right? So because she got them back way back when, like so 2012, 2013.
So $400,000 in coverage then might have been perfect amount given no husband, no kids.
And I mean, just given like society with inflation and stuff like that, it was a little bit cheaper 10, 11 years ago, right? So the 400 may have been okay, especially just considering like where she was at in her life. And then to Bree's point, life changed. Now she has 2 little ones. They have a home. There's a husband involved. All of that changes. So that 400K nowadays, with the inflation that's going on, and it's only going to get more expensive. It's only going to go up from here, y'all. Just to make that clear. So life changed. So now it's time for her to have more. So the 1.3 is the estimate of where she should be now. And so we're going ahead and getting these strategies together to make sure that she has the proper coverage, right? And then now let me give you another example, because when you hear 1.3 million, some people might be like, what kind of crazy, right?
Like, what do you mean that's a lot of money? That's a lot of coverage. Right. Why would I need $1 million? Man, first of all, $1 million is a lot of money. It's substantial. But in the grand scheme of things, it's not a lot of money. I'm going to just put that love right there.
So Bree and I together have $2 million in coverage. And we're not stopping there, because life is going to continue to change. And we want to make sure that we stay ahead of the game rather than trying to play catch up later. So we have $2 million in coverage. And again, we're not stopping there. But to give you an example, right? So the coverage, meaning that if something were to happen to you, you're covered. So if something were to happen to me, Bree would get $1 million. That's okay, but like we just stated, $1 million just isn't going to be enough as time progresses, right? So we also know another individual. she was able to get $1.5 million in coverage, plus the living benefits, plus having a free will and trust. All of that together, she's paying $80. So you have $1.5 million in coverage. You have living benefits just in case anything were to happen. And then you got a free will and trust, which we can also save that for another episode, but that's very important to have, especially if you want to make sure that certain things are followed when you are no longer here. Having that free will and trust in place, not only certain things followed, but things also protected. Having that free will and trust is really, really important. And you can have all of that. For those that may think that life insurance is too expensive, you can have all of that for $80 and you own it. You're not renting.
Yeah. Yeah, that's actually really, really wild. In terms of like coverage, the more coverage you have, the better. The better. And when you're dealing with different types of policies or different types of life insurance, because you got term, you got whole life, you got you got index universal life, you got a lot of different aspects, pros and cons with each one. And we've come to realize, we've come to learn that when you strategize and you get the right policy put in place for yourself, the right plan, and every carrier is different. And luckily we're an uncapped agency, so we get to work with, quite a few different top rated carriers. But having the right plan in place and making sure you have enough coverage, that's one of the main ways that the wealthy has, stayed wealthy or made their family wealthy on a generational level, by leveraging life insurance products. Now, to me personally, that blew my mind when I first found out that the wealthy for years have been leveraging life insurance policies to create and maintain generational wealth, in terms of like infinite banking, family banks, being able to use the money out of their life insurance policy to start businesses, buy homes, do certain things, and to just, rewash, the strategy over and over again. So for us, $1 million in coverage apiece, it's really low. It's really low. And granted, it's going to be higher. We plan on just keep growing because we want to have that integrity and moral authority to show people like we practice what we preach. And having more coverage is where it's at, only because we are not thinking about ourselves when we do these strategies for ourselves. We're thinking about our future families. We're thinking about the family that we have now and the family we're going to have later. We're thinking about what it's going to do for them. And we're thinking about the legacy that we want to leave when we're no longer here. So when it comes to that 54 million women, saying that they need life insurance or need more of it, what I would say to those 54 million women is do your research, get more informed, talk to a professional. Talk to a professional and make sure that professional is licensed. Don't talk to anyone that's not licensed. Don't talk to your brother, sister, auntie, cousin, because when it comes to what makes these things, these certain facts, misconceptions, what makes them what they are, is because people are listening to, the opinions of others. And that opinion from that person might stem from a bad experience, might stem from something that's not coming from a very level-headed, unbiased opinion. It's not coming from a fact, it's coming from emotion.
Or coming just from society, like the ideologies of society as a whole, those misconceptions that they
because speaking of society, when they show a commercial on TV or something, everyone with some sense really knows that these commercials are not here to serve you. They're here to sell you. They're here to sell you. So if you see a commercial advertising insurance in general, it could be car insurance, boat insurance, Geico, Progressive, they're not there to actually inform you on what this policy actually does, what it can do, and all the fine print. They're here to sell you, get you in the door and sell you. Now it's up to you, it's up to us to ask questions. And in our opinion, the best people to ask these questions is someone that's licensed. And don't speak to just one, speak to multiple so you can fill them out, because the way we do business is we build a relationship with our clients. We would want our clients to ask questions. Go and ask certain people questions. But let me know. Let me know what they say. And if you have an objection, we're ready. We're armed. We're ready for that. But it's important, it's imperative to just ask questions, because you have no reason in the age of technology to walk around so uninformed about something as important as life insurance.
And I mean, and we can go off on a tangent, because if you're contributing to a 401k, can you tell me the facts about a 401k?
Most people cannot.
No.
Most people cannot. Most people have the same excuse. I got a 401k because I was told that to get it. I was told that it was important. I just don't know what it does, what it's for, what are the fees. People don't know these questions and know these things, and they don't ask questions.
Right. So they're putting 100% of their money into something they know 0% about. So that's just, food for thought. But to bring it back, right, to the 54 million, and like Bree say, talk to a financial professional. I would honestly say what you can do at home is to just kind of reassess your finances, right? So just assess your contributions. Right. Sit down with your significant other and assess, both of you guys, assess the contributions that are coming on both ends. What is their, what are they getting paid? What are you contributing? Are you guys taking turns with taking care of the kids? Some people work day, some people work night shift. Think about the contributions and just really sit down and write all of those out, so you can kind of get that, get a clear idea when you see it in writing. It's kind of just oh, I didn't realize I played maybe this much big of a part in the family, right? I didn't realize I was contributing this much when it came to family, or came to the family, right? You just thought you're just being a mom, right? You're just doing what moms do. You're just taking care of the kids. You're just doing it, not realizing when you write it all out, it's man, I am contributing quite a bit. So I should actually be insured altogether, or more insured than I am, because of how much I'm contributing to this family. So definitely assess your contributions. And when you assess that, talk to a financial provider. If you don't know how to assess that, talk to a financial provider, talk to a financial professional, right? So whether you know how to assess it or don't know, still talk to a financial professional. Make sure they're licensed. And yes, we personally, if we sit down with you, then you talk to your auntie's cousin, sister, or whoever, and you bring them back, well, this person said this, let's all sit down in a meeting.
Bring them to the meeting.
All sit down in a meeting. That is perfectly fine.
It's definitely understandable that going over your finances can be uncomfortable. And that's why a lot of people avoid it. The same way some people avoid going to see the doctor, because they are avoiding bad news. You have to do the uncomfortable things.
Especially if you want better, or if you want better for your family, if you just want to make sure that your family is covered, because honestly, having life insurance is one of the most selfless things that you can do. It's a form of love, right? So instead of maybe getting those bouquet of flowers, you can come back with, hey, I have us covered in life insurance. But I'm serious though, right? Or maybe the flowers and life insurance. But it's an important fact. It's an important aspect when it comes to life insurance, and definitely explore those affordable policy options. We talked in our last episode that life insurance is not as expensive as people think it is. I just gave an example earlier of all the benefits that you can get for only $80. And how much are you really spending on coffee? Like we discussed before, in a month, you're probably already spending that or in a week, you're probably already spending that $80, right?
Right.
So
the math is math.
Right.
It's scary. It's
scary. Right. Exactly. So that's what I would say. Talk to a financial professional. Like my love said, assess your finances and your contributions. Assess what you are bringing to the table and just explore, do the research, explore the options, explore the policies. If you have questions, that's why we're here.
Right.
That's why we're doing this.
If you don't know where to start, or if you got questions, that's why we're here. And shout out to, I know the last episode we talked about, if I'm not mistaken, we talked about, the first 5 people to book a consultation. Shout out to those 5 people that booked that consultation. We are very excited for those 5 people. The first 5 people, because they ended up getting an hour with us instead of the usual like 30 minutes for the first consultation. But we're going to go ahead and extend that because it went so well with last week's podcast episode.
Yeah.
We're going to go ahead and extend that, and we're going to keep it going. So
another 5?
Another 5. Why not another 5? Because if it keeps going this well, we're just gonna do it again, because at the end of the day, this is what we're doing. We're helping families. That's our job. That's our purpose. That's our mission. So on that note, first 5 people book a consultation with us.
Second wave of the first 5 people.
Second wave of the first 5 people. If you book a consultation and you were one of the ones that booked last week, we'll do a second meeting, but we won't count those. So, but we're definitely excited about what's to come from the people that booked. We're looking forward to the next set of people that go ahead and hurry up and book a consultation with us, get that hour with us instead of the usual 30 minutes.
Get you on the right path, set you up. We're excited for the things to come with these 5 individuals. We're getting things together. We're getting some strategies in place. We've put some things in perspective for them.
As a matter of fact, doing the financial needs analysis for all of them. All of them were surprised at how easy it was, painless it was, and what revelations they had in sitting down and doing that financial needs analysis. So it was really fun. It just makes our job that much more fun. It makes what we do that much more enjoyable and worth it. But so it's Life Insurance Awareness Month. So what does that mean? That means if you don't already have life insurance, get life insurance. Jeez, you made me stutter. Get life insurance. If you already have life insurance, reevaluate and see if you need more or better coverage, because there's always the possibility that you could do better. Always. And it's also just about that time to just really think about the legacy you want to leave your family, because if you were to just pass away tomorrow, speaking of, quick story, there's this guy, this really cool guy. I can't wait to meet him. He has this crazy story of, there was a new agent on his agency, and he was doing a financial needs analysis. He was getting this agent some coverage and things like that, just getting them right, getting them set up. Would you know that if he didn't do that for that agent, it would be bad for the family? Because would you know that same night after he got coverage, after he helped that agent get coverage, that same night that agent went home, had a heart attack in his sleep, I believe. He didn't wake up. He didn't wake up the next day.
He was literally covered earlier that day.
Because he got approved. He got covered and got approved the same day. His family ended up getting from his life insurance policy, ended up getting, I think, somewhere around $500,000, if not more. I forget the number, but they were able to mourn in peace and be financially set because he had just got coverage the day before. That was very unexpected. Go home, have a heart attack in your sleep. Like we're all on borrowed time. We're all on borrowed time. So just remember, all right, you have debts, you have this, you got family you love. If you go right now, if you go tomorrow, what are you leaving your family behind besides some good memories? What are you leaving them behind? Right. So it's just food for thought, you know?
And you want it to be as nobody enjoys enduring a death in the family or somebody close to you or anything like that, right? So how can you make it as painless as possible?
Because it's never easy.
Right, without them having to worry about the debts or worry about the medical bills because it costs to live and it costs to die, right? And then worrying about any debts that happen, anything like that, like you don't want to have them worry about that and worry about how all of these things are going to get paid or, you know, now that you're gone. So just, again, it's a selfless act, especially when you have a family, especially if you plan on a family, even if it's just you, who's gonna be that beneficiary? Is it your parents? Are your parents gonna have to, right? Consider that. Do you want to leave that burden on your parents? Do you want to leave that burden on your significant other? Do you want to leave that burden on your children if it's just you and your children, right? Like, you don't want to do that. You don't want to do that. It matters. It matters. Life insurance matters. And that's why the whole month of September is Life Insurance Awareness Month.
So that's what we're going to be preaching every episode for the month of September. After September, we'll get back into, you know, leadership development. We'll get back into, you know, other things, other topics. But we're going to be preaching it to the cows come home. So listen, it's Life Insurance Awareness Month.
And we have spoken.
We have spoken. and it is what it is. Ashe. So thank you guys for tuning in for another episode of Ask Bree and Lisa TV.
Yes.
It's been a pleasure bringing you that caffeine and cash flow talk. Also, side note, hope you like our new content corner. You see it. Yeah. So new content corner. You know, we testing it out for this week. For this week's podcast episode, we are loving it. We put this thing together same day we thought of the idea. We put it together, and it was a very, very fun project. We took action. So thank you again for tuning in to Ask Bree and Lisa TV for another episode of
Caffeine and Cash Flow.
Yes, ma'am.
Appreciate you guys.
All right.
See you next time.
Peace.